Hey guys, what's up? This is Francisco with Palareso Capital. We're going to take a quick look at the market. We're going to do a market update. We're going to take a look at some of the indexes. We're going to go through the SPY, the QQQ. We're going to take a look at the NAS Composite, the IWM, and then we're also going to take a look at the DIA. So remember, guys, that this video is for educational purposes only, and everything that we're going to see is based on my own analysis and opinion. So now let's take a look at the charts. And right here, I'm using Thinkorswim. And right here in my charts, I have the SPY, which is the S&P 500 ETF. And for any of you guys who are new in my channel, the indicators that I have here, I use the TTM squeeze, I use the trend oscillator, which is a momentum indicator, and then I use volume. So those are the indicators that I use. And then you can see that I have my candles. I use them all black. That way I only look at the trend and I don't get trapped into the color of the candles. Do we have an up day or do we have a down day? So that way I only look at the trends, and you can see that I'm a fan of the moving averages. That way I can capture the trend and I can see the moving averages as support or resistance. And the ones that I have in my charts, I have the 8 exponential moving average, which is the orange one. I have this light blue one is the 21 exponential moving average. I have the 50 daily simple moving average, which is the purple line, and then I have the 200 simple daily moving average, which is the 200 in my charts, which is the pink one in my charts. So now let's start taking a look at the SPY. Right, we kind of top right here at 479.98, and you can see that the trend oscillator, right, we have been below the red line this entire time. That means that we are in a confirmed downtrend. This is a pretty amazing oscillator, which is a momentum indicator, and you can see that the market has been on a downtrend. And after we got rejected at this 458, we actually had a pretty strong move to the downside. But now what it looks like is that we're starting to find some bottoming action here. Let me zoom in just a little bit so that we can take a look at this better. So what basically happened on the previous couple of trading days, you can see right here that we actually had this bear trap. Why do I say that this is a bear trap? Because we already have confirmation of a breakup to the upside. Now, let's just think about this for a second, right? What happened here? Everyone who bought this dip, or who bought this day right here, or this day right here, or who bought this day right here, where everyone has their stops. Everyone has their stops somewhere around 385. And then anyone who wanted to get short, what level do they short it? They actually shorted this 385 level. So now you got people who got their stops taken out, the longs, and now you have all the bears who were looking for a breakdown, who short that level, and now they're trapped. And now this candle close above this level, you can see that we did not have any daily close below that level. And now we actually printed a higher low. Here we had a break of the structure, and now we're starting to move higher on acceptable volume. And now we already got above this level right here, which was 408.57. And that confirms for now a change in the trend, at least based on solely price action. Now, what are the levels that I'm looking as possible levels of resistance? The first one right now will be this 1.72, which is the Fibonacci extension from this high to this low, which is 416. And then the next level that I'm looking is 425, which is the 1618 extension based of that same swing. And that one is coming right there at that 50 daily moving average. So I think that the 50 daily moving average is going to be a really important level of resistance. Best case scenario, I think that we test it, we fail, we find support somewhere around that 21 exponential moving average, and then we continue higher. If not, I think that this is probably going to be the best shorting opportunity that we're going to get before the market continue to move lower. Of course, we just have to play it day by day. But those are kind of the scenarios that I'm looking for. I think that right now, the path of this resistance will be a quick test of this 50 daily moving average. And then after we are at that level, we will have to wait and see. Now let's take a quick look at the QQQ. For the QQQ, we kind of have seen the same, right? Basically the same analysis after we got rejected at this level. That 200 was there. We had a pretty strong move to the downside. You can see that the trend oscillator continues to trend to the downside, but now we kind of have the same kind of action, right? We have this kind of bear trap right here. We didn't take it out on this day, and now we have a pretty strong move to the upside. We have a gap that is on fill right here, and now we're moving strongly above this 306 level. And I think that the next level of resistance is going to be that 50 daily moving average. But of course, we also have the 618 Fibonacci retracement, which is measured from this swing high to this swing low right here. So this one is looking good. Perhaps we're going to get a little bit of tightening, or perhaps we're just going to break out and continue to squeeze the shorts all the way to that 50 daily moving average. Remember that moves, that rallies on a bear market tend to be really explosive, right? We have an example right here, because besides buying, we also have a lot of short covering. That's why usually when these rallies start to go, they just go for days, and they basically don't see any pauses that last for a day or two. So as for the QQQ, let's take a look at the IWM. For the IWM, right, kind of the similar kind of analysis. What is interesting is that we already tested this level, right, and we actually found support. You can see that the trend oscillator has been trending to the downside all the way since this base started, which signals distribution. And then, of course, that distribution kicked in. We broke below here, then we flagged, and then we continue to move higher. But I think that this is a really important level, because all the move that we had on 2020, we actually already gave it back. And now we take a look right here, right? Let's zoom in this a little bit. You can see that the price already broke above this 0618 retracement, which is measured from this swing high to this swing low, which opens the door for a test of that 50 daily moving average, which also coincides with this pivot right here. And of course, you can see that we actually have a squeeze, but the trend oscillator continues to be below zero. So best case scenario, I think very similar to what we talk in the SPY. We're going to see a test of that 50, and then perhaps we're going to retest these moving averages right here, perhaps have some tight days, and then perhaps we can move higher into that declining 200 daily moving average. Let's take a look at the DIA. And kind of the very similar analysis in all of them, right? You can see that we actually kind of have this head and shoulders reversal here. We already broke above that neckline, which made me think that we are going to test that 50, that declining 50, which happened to coincide with the 618 retracement measured from this swing high to this swing low. And then after that, I think that we're probably going to test it, perhaps have a little bit of a retracement, and then a continuation higher to the upside. And you can see that the trend oscillator continues to trend to the downside. We are starting to see a squeeze here, but I think that we shouldn't wait, because this move that we saw right here was on pretty low volume. And then let's take a quick look at the composite, at the NASDAQ composite. And basically the action is pretty similar to all of the other indexes, right? We have this level broke right here. We actually hold that 11,000 level, and now we're coming all the way to that 0618 level, which is the Fibonacci retracement measured from this swing high to this swing low. And then, of course, we have that declining 50, which is the next level that I'm going to be looking up in my charts. Now, what I find super, super interesting, and I want to share with you guys, is actually the action that we're seeing in the TLT and the action that we're seeing in the TNX. I think this is something really important to mention, because we are actually seeing some reversal patterns in the TLT. Right, you can see that we have this line right here, this flat line. We already had this low of 112. We actually printed a higher low, and now we're trading above this pivot right here of 118.89, and we have a squeeze. Of course, the trend oscillator continues to trend to the downside, but I think that there's a probability that we're going to test this 50, and we're perhaps going to have some tightness here, and then perhaps we're going to have a change in trend in the TLT. I think this is going to be a really interesting trade, because we have seen that bonds have been trending completely to the downside. So I do think that there's the chance of bonds rallying all the way to 133. But of course, we have to take it day by day and see that price action actually confirms that moves. But I think there's a possibility based on the price action that we're seeing right now. And then also to confirm that thesis, I want to show you the chart on the TNX. And you can see right here, right, we kind of have this head and shoulders stopping pattern. We're right there at that 50, but of course you can see that we have a bearish cross of that 8 exponential moving average and that 21 exponential moving average. You and this is really important. You see that the squeeze is already firing to the downside, meaning that momentum is pretty strong to the downside. And you can see that the trend oscillator, right, the trend oscillator has been trending for the entire time in this move to the upside, right? You can even see that even that time when we move below that 50, the trend oscillator was still holding that red line, and now you can see that we actually broke below it, which makes me wonder if we are actually seeing a short-term top in the 10-year Treasury index, which will actually favor a little bit of a relief rally that could be sustained for a couple of weeks in the NASDAQ Composite, in the SPY, in the QQQs, and especially in tech, semiconductors, and all that kind of names. So let's take a look at the semiconductor chart, because I think that's an interesting chart as well. And you can see right here, right, that we have been trending to the downside, right? We have a confirmed trend to the downside right here on this day that we actually got rejected at that red line right here, which was somewhere around here. And then of course this has been trending lower, and the trend oscillator was trending lower as well. However, you can see that the price continued to make lower lows, but the trend oscillator is actually trading sideways. What it catches up with the red line, which is actually a bullish sign, and you can see that we have a squeeze, and of course, we kind of have this head and shoulders bottoming pattern, and of course we have the neckline somewhere around this level. So we will have to see if the price in the SMH wants to actually pause at this 50 daily moving average, come back a little bit, retest these moving averages, and then perhaps had a strong move to the upside somewhere around the 270 level, which is that 200 daily simple moving average in the upside. And then let's just wrap things up really quickly here with the UVXY and the VIX. I usually check them both because I think it's really important to know what is happening with the VIX and the UVXY. And you can see this is something that confirms, well, not confirms, but this is something that gives us kind of a higher probability a scenario for the market to actually have a sustained rally or a short covering rally, whatever you want to call it. Because what we are seeing right here in the VIX, you can see we kind of tested this level right here. But what has been happening on the VIX is that we continue to make lower highs, right? Lower high, lower high, lower high. Then we start getting rejected at that 21 exponential and that 8 exponential moving average. You can see the bearish cross right here. And what I'm seeing right here, kind of the scenario that we had over here when the trend oscillator broke below that red line, we actually had a strong move to the downside. We had a really strong move to the upside in the equities, a short covering rally, and we had a squeeze that fired to the short side. So now we're kind of having the same scenario, right? You can see here that we tested that 50. Right here, we're testing it that 50. The trend oscillator is breaking below that red line, and you can see that we have a squeeze pointing to the downside, which makes me think that we're at least going to come somewhere around this 200. If not, we're going to test these previous lows that we saw somewhere around March. So that's something super interesting, and I'm going to keep watching this chart for more confirmation. And then finally, let's take a look at the UVXY, which we have right here, and you can see the UVXY. Let me remove this right here. You can see that the UVXY, right? The UVXY has been trending for a long time right here. And it makes sense, right? Since the market was trending to the short side. However, you can see that the UVXY wasn't able to break above this 200, right? We tested this 200. We got rejected here, got rejected here, got rejected here, got rejected here. And now we're starting to see a squeeze that is pointing to the downside, something similar to what happened here. And we had a really strong move to the downside. And now I'm thinking that there's a chance that we're going to retest these lows right here in the UVXY as well. So going back to the chart in the SPY, I think that my outlook for the week that is coming is that we're going to see more upside. We are most likely going to see a short covering rally that is going to come somewhere around that 50 daily moving average in most of the charts that we took a look at, the QQQ, the SPY, the NASDAQ Composite, and the DIA. And I think that there's a chance that that we're going to see a meltdown in the VIX and the UVXY. So my outlook for the next week is a bullish outlook. I think that we're going to see some interesting opportunities on the long side, and I'm going to share many of the names that I'm looking. I'm looking at some of names. I have most of the names that I'm looking at are in the XLE sector, and I'm going to take a look at some of those names in another video for the watch list of the week. So make sure to like and subscribe, guys, and make sure to take a look at the watch list video as well. So thank you so much, guys, for watching. Take care, and I hope that you had an amazing 3-day weekend, and now that you have all that energy for the week, so make sure to have a strong watch list and get ready for the week. I wish you the best of luck, and thank you so much. Bye bye.